Hey everyone, welcome back to another charting session where we break down what's moving the markets and what you need to be watching this week. If you're new here, my goal is to make market analysis approachable and actionable. Whether you're a day trader, swing trader, or someone who's just trying to learn how to navigate the markets, this space is for you. Each week, I go beyond just pointing out tickers. I help you understand the story behind the price action so you can trade with real confidence, not just vibes. Before we dive in, if you've been finding these sessions helpful, do me a huge favor, hit that like button so this content can reach more people who are trying to grow as traders. Subscribe to the channel so you don't miss future sessions. We drop weekly watch lists, educational breakdowns, and live trading content regularly. And most importantly, drop your top watch list names in the comments. I want to know what you're watching this week, and I'll make sure to chart out some of your tickers in the next video. This is a community. Your input helps shape what we cover each week. All right, let's lock in and get into the content for this week. Before we jump into our watch list, let's take a moment to cover the insight of the week. What's shaping the market's tone and where we need to stay sharp. Let's start with this week's economic calendar. We've got some key data drops coming up. Tuesday, consumer confidence numbers. These give us a real-time pulse on how people feel about the economy right now. Super important for gauging potential shifts in consumer spending. Wednesday, we'll get new home sales data tied to broader economic health and inflation pressures. Thursday, we'll see the final first quarter GDP revision and the latest jobless claims. Both could move markets if there are surprises. Friday, probably the biggest catalyst this week, the PCE inflation report. This is the Federal Reserve's preferred inflation gauge. So the entire market will be watching this closely to see how it could shape future rate decisions. But it's not just about the economic data. There's serious geopolitical tension unfolding right now. The conflict between Israel and Iran has escalated with growing military activity, and the U.S. is becoming more visibly involved. Not just diplomatically, but also in positioning assets. This isn't just a headline risk. It has potential market impact, especially in energy, defense, and global supply chains. Crude oil could see volatility, and we may see risk-off behavior in the broader market if tensions rise further. Whenever you get major geopolitical events layered on top of a critical economic week, it's essential to stay nimble and keep macro conditions front of mind. It's not just about your charts this week. It's about what's driving the tape. A small rant or something to think about come from the fact that the United States attacked Iran. Very likely that the US is going to justify the attack by saying that Iran was violating agreements. However, do you think Iran will stay put if it has the means of defending itself? Many countries see our attack as an act of war. Thus, it is likely that they will want to retaliate, perhaps an attempt to strike some American military bases. Furthermore, the U.S. will push the narrative that a terrorist government cannot be allowed to be in power in Iran. So think about this very clearly. What has happened in the past? History tells us that we either are going to support a coup that's going to overthrow Ayatollah Khamenei, or we are going to send in American troops to overthrow him manually. It is very similar to what happened in Iraq. Some argue that it was never about weapons of mass destruction, but rather about making sure that their government and their natural resources go to the benefit of American multinational corporations. This wouldn't be the first time that the US overthrew a government. Actually, look into Iran in 1953. The US overthrew the Prime Minister of Iran, Mohammad Mossadegh, for the crime of wanting to nationalize Iranian oil. That would have meant profits going to the Iranian people. He was replaced with a member of the Persian royal family, the Shah, who did America's bidding and ran it according to American interests. The current government in Iran holds similar goals and values as the government that was overthrown decades ago. I invite you to look into the guy that world powers want to replace Ayatollah with. If you do your research, you might run into the son of the royal family member that replaced the last government. Coincidence? Sure. All right, enough of my rant. With that in mind, let's get into our tickers for the week. Whether you're actively trading or building long-term positions, these sessions are designed to give you both the technical levels and the macro context to help you make smarter decisions. We're going to kick things off by covering the big three that always anchor our watch list: SPY, QQQ, and IWM. These ETFs are not just benchmarks. They tell us a lot about the health of the overall market, risk appetite, and sector rotation. After that, we're diving into three individual names that have some very specific catalysts this week. Nike, coming into earnings with a lot of eyes on consumer demand and China recovery. CRISPR Therapeutics, positioned at the front edge of the biotech sector with potential for big moves. And Sunrun, a clean energy name that's highly sensitive to rate expectations and could be setting up for a breakout. Each of these names brings something different to the table. Different sectors, different macro sensitivities, and different potential plays depending on how this week unfolds. We're not here to chase. We're here to identify setups with purpose and manage risk with intention. Let's get into it. All right, let's kick it off with SPY. This is the heartbeat of the market, and right now we've seen a lot of resiliency, but we're waiting to see if this turns into true strength. Yes, I have an eye on the PCE report. That's the Fed's inflation gauge, and it could dictate whether this rally keeps moving or if C need to pull back to fill in the downside gap. Technically, we're riding a really clean uptrend. We push and retrace, but continue to see buyer volume. Two key levels for me are 591 and 580. If we lose that, I'd expect a quick pullback, maybe even that gap fill mentioned at around 562. On the upside, 605 is the big level I'm watching for a breakout. If we can push through that with volume, we could see this thing continue to melt up toward all-time highs. But we also need to stay mindful of the global picture. Geopolitical tensions are heating up, especially with Israel, Iran, and now the US stepping in more directly. That can shift sentiment fast. So this week, it's about playing both sides. Watch for continuation setups, but don't ignore the warning signs if we start to see cracks. Now let's dive into QQ, which has really been the powerhouse of this entire market rally. This is where the big money has been living. Big tech, semiconductors, the AI boom, it's all concentrated here. The key theme for QQQ right now is how sensitive it is to treasury yields. If yields stay low or start to drop, QQQ has room to keep climbing. But if we see even a minor spike in yields, this is the index that typically feels it first. On the technical side, I'm watching 515 as my line in the sand. That's the level where buyers have been stepping in. If we lose that, we could see a sharp pullback, possibly towards some of the prior support zones. On the upside, the big level is 540. QQQ has flirted with this resistance, but hasn't been able to fully break and hold above it. If we push through with conviction, that could set the stage for another strong leg higher. One of the biggest catalysts this week is the PCE inflation report. If that comes in soft, it could greenlight rate cut expectations that were covered this past week, which is exactly what growth stocks want to hear. Also, keep an eye on NVIDIA and AMD. Semiconductors continue to be the heartbeat of QQQ's momentum. If chips stay strong, QQQ likely holds up well. But remember, geopolitical risk is still a factor, especially with the growing tensions between Israel and Iran and increasing US involvement. If we see any risk-off spikes, QQQ is often the first place traders pull profit from because of how extended tech is. So overall, I'm watching for clean continuation setups above 540, but also staying ready for any quick shifts in sentiment if yields or global headlines start to move the market. Let's talk about IWM. This is where things get interesting. IWM tracks the small cap space, and this part of the market has been lagging for most of the year, while SPY and QQ have been making headlines. But lately, we're starting to see some potential rotation into small caps. This could be the early signal of a broader risk-on environment where investors feel comfortable stepping outside of mega cap safety. The big thing with IWM is its sensitivity to interest rates. Small caps tend to carry more debt and have tighter margins, so they benefit disproportionately when rate cut expectations grow. Support is sitting at 200. That's the level I want to see hold. If we lose it, we could be looking at another round of small cap underperformance. On the upside, the key breakout zone is 212. We've rejected there multiple times. So if IWM can break above that level with solid volume, it could open up a new upside leg. The macro data this week is going to be important. If the PCE print comes in soft, that could fuel more interest in small caps. If yields start dropping, that's another green light for IWM. Also, pay attention to sector rotation. If we start seeing money move out of tech and into financials, energy, or industrials, that typically benefits IWM. But keep in mind, if geopolitical risks escalate, or if the economic data misses, small caps are usually the first to get hit because they're seen as riskier assets. Bottom line, IWM has the potential to finally break out of its range, but it needs the right macro environment and volume confirmation. If we get that, small caps could finally start catching up to the rest of the market. Let's shift over to Nike, ticker NKE. This is a big one this week because Nike is reporting earnings on June 26th, and the report is going to carry weight not just for the stock, but for the consumer discretionary space as a whole. Wall Street is really looking for two things. Can Nike maintain margins? And is consumer demand holding up, especially in China? Support is sitting right around 56. If earnings disappoint or if guidance comes in soft, this is the first level I'll be watching to see if buyers step in. This also happens to be the COVID lows. Interesting spot, huh? In this scenario, we could see price retrace to the $50 mark, which is a level that hadn't been touched since 2017. That is until April of this year. Yearly low that I have in mind sits around the $40 mark. On the flip side, if Nike beats and offers strong forward guidance, I'll be watching 65 as the initial upside target. That's the next resistance zone I'd want to see get cleared with volume. If this holds, we can start looking at the 70 mark and a potential push into 78.550, halfway from COVID lows. A lot of the narrative is also tied to China. Nike has been banking on Asia Pacific growth, and any weakness there could trigger a fast repricing. Also, keep in mind the competitive landscape. Adidas, Lululemon on running. These brands are not sitting still. Nike has to keep innovating to defend market share. Ultimately, I'm not here to gamble into earnings. I'm looking for post-earnings setups. I want to see if Nike holds 56 on a dip, or if a breakout above 65 comes with solid volume confirmation. So this week, the plan is to stay flexible, let earnings play out, and then see where the technicals line up for the next trade. Next up is CRISPR Therapeutics, ticker CRSP. This is a speculative but high upside biotech name that continues to lead in the gene editing space. After getting FDA approval for Casgevy, their sickle cell therapy, CRSP became one of the most important tickers in this space. But now it's all about what's next. Investors want to see the pipeline grow beyond sickle cell. I'm watching 36 through 40 as key support. That's the floor where buyers have stepped in since price fell back into this range in May of 2022. If we lose that, we could see a sell-off, which is typical for speculative biotech. However, that would place price in a range that hasn't been tested since 2018. On the upside, 48 is the initial level that I am eyeing. There is a breakout zone between 48 to 52, and if CRSP clears that level with volume, we could get a strong push higher, aiming for 58 with momentum into 68 to 74. The biotech sector overall has been catching some rotation lately, and CRSP often moves in tandem with those sector flows. But remember, biotech is extremely headline sensitive. A trial miss, a regulatory delay, or even bad news from a competitor can cause these names to swing aggressively. So with CRSP, I'm watching for clean technical setups, confirmation volume, and any new clinical or partnership headlines that can push this stock out of its current range. CRSP is still tied to its partnership with Vertex, which is a key financial backstop for them. Any additional updates from that partnership could give this stock a boost. Finally, let's dive into Sunrun, ticker RUN. This is a high beta clean energy play that's been under pressure for most of the past year, but it's starting to carve out a potential base. RUN is extremely sensitive to interest rates. When treasury yields drop, solar stocks like RUN tend to pop because lower rates make solar financing more affordable and boost demand. Price sits nearly at all-time lows. To me, it makes it intriguing. Ideally, I would love to see a hold above $6. That's the level that needs to hold. If we break below it, we could see another round of weakness in the stock, potentially breaking the all-time low of $4.15. On the upside, $8 is the key level. If RUN pushes through 8 with volume, I'd expect a fast move into $10, partly because this is a heavily shorted name that could trigger a short squeeze if buyers step in aggressively. The golden zone you see on the chart is IPO range. The clean energy sector has been gaining some traction lately, and policy support from the Inflation Reduction Act is still in place, which keeps the long-term story intact. But execution risk is real here. Sunrun needs to scale installations while keeping margins in check, and they're facing strong competition from Tesla, SolarEdge, and others. So with RUN, I'm watching for volume confirmation, clean energy rotation into solar, and of course, I'll be tracking treasury yields because that's going to set the tone for how much breathing room solar stocks have. This is a name that can move fast when it goes. So it's all about patience and letting the levels develop. All right, that wraps up this week's watch list and key market insights. We've covered the major indices, SPY, QQQ, and IWM, and we've broken down 3 individual setups with big catalysts, Nike, CRISPR Therapeutics, and Sunrun. This week is loaded with macro catalysts, so it's going to be crucial to stay nimble and watch how the market reacts to each of these events. Also, don't forget about the global picture. The tensions between Israel and Iran and the increasing involvement of the US could absolutely shake things up, especially in energy markets and overall risk sentiment. As always, manage your risk, protect your capital, and respect your levels. The setups we talked about today look promising, but nothing is guaranteed in this market. If you found this session helpful, go ahead and drop a like. It really helps the channel grow and helps this content reach more traders like you. Also, subscribe to the channel if you're not already. We drop new sessions like this every week, along with educational breakdowns, live trading content, and more. And I'd love to hear from you. Drop your watch list names in the comments or let me know what you're tracking this week. I always go through the comments and I'll make sure to chart out some of your tickers in the next video. Appreciate you all for tapping in. Stay sharp, stay patient, and I'll catch you in the next session.